Hi, everybody. This is Steve Maggi from SMA Law Firm. Welcome to Building the Bridge. My guest today is Jacob Willemsen, the founder of Transatlantic Business Services in New York. Hi, Jacob.
Hey Steve, how are you?
Great. Thanks for being with us. So, one of the big questions that we see from our foreign clients that are thinking of operating in the US or already operating is tax, and that's specifically sales tax. We have EVA in South America, we have VAT in Europe, and we have sales tax and use tax. What are some of the things that you're seeing, and why is it important to account for sales tax? Maybe you can tell us a horror story or two of what you've seen, people not planning things the right way.
Yeah, no, and then, it's absolutely true that sales tax has become much more on the forefront since 2018. There was a famous Supreme Court decision, um, Wayfair against South Dakota, and since then, sales tax is really a headache for many companies because it is complicated. Number one, sales tax. If you compare it to EVA or VAT or BTW, it is something that only applies to the last step in the supply chain,
Mm,
right? So if you are a wholesaler and you sell to retailers, sales tax does actually not apply. You have to keep a certain administration to show that you sold to retailers, but only in the last step of the supply chain do you charge sales tax. And at that point, it doesn't matter whether a company is the last buyer or an individual is the last buyer. They
mm,
both have to pay that sales tax and cannot use it as a credit towards sales tax that they may have collected. If I'm buying a computer for the operations of taps and I pay sales tax over that, it's part of my P&L. It's just an expense. I can no longer deduct that from any other taxes. So that's one important part. Sales tax is also important to note that sales tax is a state matter. So sales tax can differ from state to state. The sales tax jurisdictions in the US are well over 1,000,
mm.
11,000. So
Wow.
there are 11,000 different rates. Definitely something that if you have high volume, low value transactions, you want to solve this problem by having a software like Avalara or TaxJar on top of your ERP that determines whether you should collect sales tax in a state, and if so, how much. And that is determined by, in many cases, the delivery point, so the shipping address, and the zip code there. So, having said that, another important difference is sales tax in many cases and in many states doesn't apply to services. It only applies to tangible goods. Now, the definition of what is a good differs per state. In some states, SaaS, software as a service, is actually considered a product, subscriptions, memberships, and things like that. So it's something that we cannot go too far in detail here, but it's something that you definitely have to hire a professional for or use that software, because it is, if you compare it to something like corporate income tax, it is also something that the local states are much more dependent on, and they go after sales tax avoidance aggressively. So we had clients that were also shipping in goods from headquarters, point of sale items, or other items that were ending up on the balance sheet in the US entity. And with an audit, the US tax inspector or the New York tax inspector said, well, actually, how did you buy this product? And can you show me that we ever received a use tax or a sales tax on that product?
Mm,
And the client couldn't show it. And with that, they basically admitted that they had escaped a use tax, and they got heavily penalized for that. The penalties on sales tax are actually, I think, quite harsh, because it is so difficult to adhere to everything. that in some cases, even though you do your very best, the system is just quite complicated.
And you
So
open up Pandora's box sometimes when they discover one thing, then they'll start looking for more, right?
well, exactly. And of course, the sales tax system in the US is all based on the old days where you had the local hardware store that was selling locally. But nowadays, with e-commerce and all the interstate transactions, the fact that sales tax is a state matter still means that if I'm only based in New York and I'm selling something online as kind of a side catch to a client in Arizona, and I've never really done efforts to sell in Arizona, but this is more a flyby customer. I cannot even charge sales tax to that customer because I'm not based in Arizona. I have no authority to collect sales tax in Arizona.
Interesting. And that's important to be able to collect it, right? That's why some of our clients will set up or register their entities in multiple states, right?
Yeah, which basically means that if you are a Delaware entity, it could very well mean that because you have customers and substantial business in New York or in California, that there are certain thresholds that when you meet that threshold, you have to register in that state in order to have authority to collect sales tax on your transactions in the future. That means that because you're now known with the Department of Revenue of that particular state, that they will also have you on the radar, perhaps for corporate income tax in the future. So it has a lot of implications, sales tax, and don't think that these are implications that only apply to US entities. If you think that you can do business with your German GmbH or Dutch BV in the US and have substantial business in a state, the same threshold applies to Delaware Inc. as to a Dutch BV. If they see that you have substantial business and you have tried to, you've done business development in order to generate that business, they can argue that you were present in that state for sales tax.
Amazing. We come from places, both of us, that, largely federal, and we have civil codes in most of the world, and there's one kind of treatment or one kind of law that applies essentially across the board. And the US, like you said, is over 11,000 different entities that are trying to get a portion of what you're making. So it's really important to plan correctly. And then also, as you're growing, to make sure you're monitoring your progress in different states, right?
And it has such an impact. For instance, I see a lot of European, for instance, machine manufacturing that sell their product include services and maintenance for a year or two. Well, if you now sell it in one line item, that whole line item becomes sales taxable because its product is included and product is sales taxable. If you would have split it or even make split invoices, it could have meant that some of your invoice would not have been sales taxable while the other is sales taxable. So in that way, you can save the client money. What I also want to emphasize is that if you cannot charge sales tax because you are not doing enough business in that state to register, it's actually not going to be less expensive for your customer. The only difference, if you cannot collect sales tax, is that you basically put the burden on your client to file a use tax with the state for all their purchases that did not include sales tax. And there are actually quite some examples of companies that no longer want to do business with vendors that cannot charge them sales tax, because that puts the burden on them, and they rather put the administrative burden on the seller.
So many different things to think about, Jacob. So if somebody has a mind to expand their operations or to start selling their products in multiple states, maybe incorporating in the US, how do they reach you to sort of flesh it out and come up with a plan?
Yeah, especially on sales tax, we have an expert. We have also dedicated software where we can always do research on whether certain product or transactions are sales taxable. So they can always reach out to us, and we'd be happy to talk to them free of charge. It's always good to have an introduction call, so at least you know to some extent what the you can do an assessment, a quick scan of what your situation may be.
And how do they reach you?
Oh, they can always reach us at bizdev@tapsinc.com.
Okay, fantastic. Thanks for shedding some light on an extremely complicated issue. It feels like an onion the size of Idaho that you keep on peeling, and there's another layer. So it's great to know there's somebody who can help people maneuver this complicated issue.
I always say in Europe, there's a famous, well, actually it's a Dutch beer brand, and the founder wished their competitors a lot of employees because employment matters are so difficult in Europe. In the US, you wish each other sales tax because it's a difficult animal.
Thank you so much for your time and for your knowledge, Jacob.
You're welcome, Steve. My pleasure.